Let us now calculate the cash flow from investments. So we have discussed cash flow from investments earlier, and what we noted regarding cash flow from investments was that they can be divided into two types. One, it could be purchase of fixed assets, so this would be a cash outflow, and there could be a transaction related to sale of fixed assets. FA is fixed assets, so this would relate to cash inflows. So we had seen these cases where cash outflows and cash inflows are to be considered, and here we had assumed that a change in gross block of your fixed assets, assuming that there has been no sale of fixed assets, the change in gross block will give us how much amount was purchased. So let us look at in our case, whether we are able to kind of come to this number or not. Here we note that from the income statement we see that there was a gain from sale of land. So here, first thing, gross property, plant and equipment was not sold. So if this was not sold, whatever amount that has been increased from 2006 to 2007, that is basically to an extent of 50,000 here, this would be related to the cash purchase. So again, just to reiterate, when we look at the income statement, we have seen gain from sale of land, and land has been classified as another kind of fixed asset. So we are talking about this gross property, plant and equipment. Here, whatever the amount that has increased in terms of its gross value, that is 50,000, this would be related to the cash purchase. Now quickly look at what is the net block. We have earlier discussed that another way to find the purchase is basically difference in net block plus your depreciation. So let's see what was the difference here. 138,000 minus 102,000, this comes out to be 36,000. And what is the depreciation in the income statement? Depreciation is 14,000. So when we look at this number, you can also find your purchase using this formula, or you can go by the gross approach. So whichever way it is, basically we are talking about 50,000 as the cash outflow because of purchase of fixed assets. Now let us look at another case of sale of fixed asset. Here in our case there is no sale of fixed asset, but there is sale of land, which is again a large long-term asset. So if we look at this, we note that the fixed asset was sold to an extent of 10,000. So from 80,000 it moved to 70,000. So your book value of whatever was sold was 10,000 and the gain was 20,000. So as we have learned earlier, when it is sale of land or fixed asset, the cash inflow, because this is a sale, so it will result in cash inflow, we have seen that this would be change in book value plus your gain from sale. So this was change in book value was 10,000 and your gain was 20,000 here. So the total cash inflow essentially is 30,000. Okay, so this is what the cash inflow impact from the second part would be like. So what is the overall impact? The overall impact is that 50,000 is the cash outflow, 20,000 is the cash inflow. So there's a net impact of CFI, which is minus 50,000 plus 30,000. This comes out to be minus 20,000 as the cash outflow. So having calculated cash flow from investments, let us move to cash flow from financing.